listening to the Daily Gold Podcast, covering precious metals, the junior mining sector, and global capital markets for intelligent investors. Now, here is your host, Jordan Roy Byrne.
Hey everyone, welcome back to the Daily Gold Podcast. Thank you so much for tuning in today. We have a new guest. He is Brent Johnson of Santiago Capital. And Brent, thanks for coming on today. And as you get started, can you give our listeners just a brief background of what you do and how you came into precious metals?
Sure. Yeah. First of all, thanks for having me. Always enjoy talking about this topic with smart people, and I appreciate you giving me a chance to share my ideas and hear yours as well. So from a big picture standpoint, I've been in the wealth management business for almost 20 years now. Started off with a firm called Donaldson, Lupkin and Jenrette, which then became Credit Suisse, and was there for a number of years in the late 90s into 2009, managing the kind of high net worth portfolios for people in the Bay Area here. San Francisco. And then I left Credit Suisse in late 2009, joined a buddy of mine who I had previously worked with at Credit Suisse, who had set up his own independent wealth management firm. That's called Baker Avenue Asset Management. So I moved my clients over to there. And then subsequent to that, in addition to managing the overall wealth management business at Baker Avenue, started Santiago Capital, which is really the precious metal solution to my clients' overall diversified portfolios. So, it's been kind of interesting, I guess is the right way to say it, 4 or 5 years in the gold space. It hasn't had the type of success that I initially expected that it would, but I still think that it provides a very key part of a diversified portfolio, and I have no doubts in the years ahead that it's going to become a more important part of the overall portfolio. So whenever I'm talking about gold, I always kind of think of it from a big picture perspective. I know some people that I talk to are just focused solely on gold, and I think there's a lot to be said for just focusing on gold. I additionally think it's very important to look at it from a big picture basis and consider other assets as well. And so I kind of come at it from a little bit different angle than maybe your typical gold fund manager.
All right. Well, thank you for that. Now let's get into some of the specifics of what you see in the current gold market. Let's talk about currencies and the dollar, because you told me, and I followed your work a little bit, you're a dollar bull. You believe that the dollar and gold will go higher over time, I can say. And I guess just one interesting comment I'll make is it's been interesting how weak the dollar has been in the last couple weeks or last month or two. Yet if you look at gold and gold stocks, I mean, the action in them, at least in my opinion, is really not what you would expect with that kind of dollar weakness. Maybe you could discuss that shorter term view and then kind of your big picture view, why you see gold and the dollar going higher together.
Sure, absolutely. So, yeah, I know in general, I think the theory is that, gold is either a commodity, or if you consider it a currency, it's a competing currency to the dollar. And if you have a commodity that's priced in dollars and the dollar goes up, then that means whatever's priced in that currency probably goes down, whether it's gold or nickel or steel or copper or whatever it is. And so theoretically, if the dollar gets weaker, then those commodities go up in price, including gold. And that's a legitimate viewpoint. I don't think it holds 100% of the time like a lot of people do. I actually consider gold to be both a commodity and a currency. I think it's a commodity, but the fact that it has so many unique characteristics, it has ascended to become money or a money substitute. So I think it is a currency. I think it's the best currency, but until everybody else agrees with me, the price may not rise. So regarding the dollar and gold, I think there are times where it will go up together. And I think we're actually entering one of those time periods. I can kind of get into the reasons why that is. A lot of it has to do with the flight to quality from everything else. But, I think in general, just because the dollar is going up, it doesn't necessarily mean that a competing currency has to go down, or especially in the case of gold. To a certain extent, I think that both gold and dollar, as I said, will benefit from a flight to quality, but I don't necessarily think that means that the dollar is going to zero, eventually, and gold's going to go up on the back of it. I think that the dollar will be a beneficiary of chaos, for lack of a better word, from around the world, whether it's the euro, whether it's China, whether it's Japan. To simplify my argument, I think the U.S. is going to get a number of of capital flows fleeing from around the world coming to what is a perceived safe haven in the U.S. And I think those dollar flows or those capital flows into dollars will provide a boost to the dollar, and that will make the U.S. a relative safe haven to everybody else. Now, when I say relative safe haven, that doesn't mean that I think it's a great place. It's just relative to everywhere else. I think it will still be seen as a better place. And I think those capital flows will flow in. It will increase the value of the dollar. I think it will actually probably increase the value of the stock market and perhaps real estate as well. But I think some of those flows will find its way into precious metals as well. And so I think in the very short term, I think gold may be a little bit under pressure. I've been saying that for about 6 months. I did an interview right before the election in which I said I was really worried about gold for the next 6 months. That turned out to be correct for about 2.5 months. And then it was wrong for the last, call it 2.5, 3 months. And part of the reason that I said I was worried about it for the next 6 months back in November was that I continue to believe that the dollar is going to move higher. Now, it did move higher initially, but as you pointed out, it's kind of really pulled back here quite a bit in the last, call it 2 or 3 months. And it's actually lower now than it was in November. It's lower now than it was before the election, or kind of right at the same level. And so I was kind of hoping that the dollar would have already broke out by now and that gold would be moving up along with it. The reason I'm still somewhat worried about gold is because of this pullback in the dollar. And the dollar, it's pulled back, and yet the dollar is pulled back, and yet gold hasn't really taken off as a result. It's bounced a little bit, but it's still relatively weak to where it was last summer and even earlier this year. And I think when the dollar initially breaks out, that will initially be bad for gold. Again, I don't think that it's going to ruin gold. I don't think gold's going to zero. I don't think gold is dead by any means. In fact, I think it's probably one of the better buys out there. But in the initial breakout of the dollar, I do expect gold to struggle a little bit. And I think then once people realize that the reasons that the dollar is getting stronger is because things aren't that great, that the gold will start to get some flows as well and will really be off to the races. So that was probably a very long and rambling answer to your question. I apologize if it was not very coherent, but that's in a nutshell. That's kind of my view, and happy to kind of go into any more detail on anything you want to.
Oh, no problem at all. I love the long answers. Yeah, before I ask a question, one thing I'll just comment on. I agree with you in your thought that the dollar breakout, it kind of sounds perverse, but that's what I, in some of my work, was thinking in the last year or so, that, the dollar breakout, if it breaks above 100 or 103 on the index, of course that would be bad for gold. But, I mean, if it would get above 110, you'd have to think, that would create the conditions that would be a catalyst for gold. I mean, it doesn't really make sense. Conventional wisdom. So I definitely agree with you on that. Yeah. I guess one follow-up question to that would be, what kind of time frame? I mean, of course, nobody has a crystal. Well, I don't know. Maybe you have a crystal ball, and it's just not with you right now. Yeah. But nobody can predict the timing of anything. Yeah. But I mean, we do see, economically, it seems like the rest of the world is a little. I mean, we're kind of closer to the end of our cycle than the rest of the world. I mean, how does, at least in terms of the economic growth cycle, how does that factor into your view? I mean, over the next 6 or 9 months.
Yeah. So very good point. It's very hard to time these things. And, I'll be the first to say that I have not done the best job of timing this stuff over the last 4 or 5 years. So, anybody who's been in gold for the last 4 or 5 years, it's hard for them to say they have good timing skills, right? But here we are. And I kind of think that, at the end of last year, beginning of this year, it was my view that the dollar is going to go higher. And I still hold that view. In hindsight, the problem was there was a lot of other people that thought the dollar was going to go higher as well. If you looked at, Wall Street forecasts, et cetera, I think one of the more quote unquote crowded trades was that the dollar was going to move higher. And I think anytime you get that much of a consensus on one side of the trade, it typically ends up going the other way. And, that's certainly what happened in the short term. But the flip side of that is now, I think since then, a lot of people are going the other way. And, now that, we've had the Brexit in Europe, but now they're trying to negotiate for a soft Brexit. We have Macron, who won in France, and, the quote unquote Le Pen threat is behind us. And so a lot of people think that the euro, this populist movement in Europe was just a blip on the radar screen. And now we're back to the status quo. And, as a result, flows are going to Europe, and the euro's getting a bid. And, even Germany, Merkel and Schäuble have come out and said the euro's too weak for Germany. And so, in the short term, the euro's getting a bid. The problem is that I don't think things are getting better in Europe. I think if I had to look at one person in the world who was in a worse spot of any anybody, most people would say Trump, and, he's kind of getting knives from all sides, but I don't think anybody has it worse than Mario Draghi. I think that he is in an absolutely unwinnable position. And I could talk for 2 hours on why that is. But in the short term, it looks, we've got the German elections in the fall. The problem with Macron winning, I think, in France is now everybody thinks, it's back to business as usual rather than making any changes based on, popular sentiment. And so I think Macron's going to be just an EU bureaucrat. And if Merkel wins in the fall, she's obviously going to stay the same as well. And there's not going to be any meaningful reform. And I think, so by the end of the year, if not earlier, people start to realize that Europe is not fixed. The euro is doomed. Rates can't rise in Europe without causing all kinds of problems. But Mario can't keep buying bonds forever either. And I think there's going to come a big problem in Europe. And I think that's going to lead then to the outflows from Europe back into the U.S. So again, long rambling answer. I apologize for it, but I can't see the dollar staying down for more than another 6 to 9 months. I mean, anything's possible, obviously. And listen, if I'm wrong on all this and the dollar does go back to the low 90s or high 80s, that should probably be good for gold for the opposite arguments, right? So if that happens, so I can live with that, but I just can't see that happening. I do think that by the end of the year, the dollar, or at least it'll be moving back up, if not at new highs. And by this time next year, I expect the dollar to be, above that 110 level that you were talking about earlier.
Okay, now let's talk about precious metals specifically and your positioning. You don't have to talk about it in great detail, but you mentioned to me off mic that you had sold your positions in October and you're still on the sidelines waiting. And so I just wanted to know, with respect to your waiting, are you waiting for certain like macroeconomic factors, the things that you've talked about, or are you waiting for just looking at the charts to see, oh, well, wow, precious metals are super oversold, I'm going to accumulate? I mean, is it like a particular support level? How do all those things factor into, when you will start buying again?
Yeah. So, I can't talk in too much detail, but I can give you just, broad levels of how we're positioned. Now, as of right now, when I talk now, I'm talking about Santiago, just the precious metals part of the portfolio. I'm not talking about, the equities, bonds, commodities, et cetera, and the other parts of clients' portfolios. But in the precious metals portfolio, we own physical gold. We own it outside the banking system. We own the bars. We have the serial numbers. I inspect them, et cetera, et cetera. We have third-party auditors inspecting them. So we have greater than 50% of the precious metals portfolio in physical gold, and we still have that, and we never plan to sell that. Well, years down the road when it's much, much higher, then maybe we sell it. But as of right now, that's the hedge kind of against everything else. Now, the other part of the precious metals portfolio, the part that we had allocated to the mining stocks, we sold in early October, late September, early October of last year. And partly because we had a view that gold was going to fall. And that's what I discussed when I did that interview last November. And so, when the sell-off came in November, December, even at first, maybe day or two of January, we were comfortable with that positioning. Now, obviously, there was a nice run from beginning of January or first week of January through, first week of March or something. And so we did not participate in that. But now, if you look now, I think precious metal stocks for the year, I believe, are flat. Maybe they're up 1% or something. Maybe 2%, but they're pretty flat year to date, whereas the bullion is still up 9%, I think. So, they just haven't really taken off yet. And part of it is that, I think, so we have not bought our mining positions back yet. So we still own our physical gold. We have a lot of cash. We have some hedges on against the physical gold, but we don't own any mining stocks right now. Actually, the only gold company that I own right now is Gold Money, which is not even a mining company. It's a, gold storage and payment system, for lack of a better word. But I don't own any of the miners right now. And part of it is because I thought that gold needed to have a pullback. Part of it was that I thought the dollar was going to get stronger. Part of it was because it had a nice run up in the first quarter, but now has been pulling back, and Q2 is typically the weakest quarter for gold on a seasonality basis. If you just go back and look at history, Q2 is typically one of the weaker time periods of the year. Now, that doesn't mean it always has to play out that way, and it doesn't mean it'll play out that way this year, but that was part of my thinking. And part of it was what you said earlier, is I think there is the potential that we have a real serious correction in both gold, silver, and the mining stocks. stocks, and I wanted to have some cash to use as a kind of a once in a lifetime buying opportunity should it present itself. Now, I'm not convinced that's going to present itself. If it doesn't present itself, we're going to be fine. And will we have to buy at higher levels? Yeah, we'll have to buy at higher levels. But if and when we will eventually come out of this, bear market, and perhaps we already are, right? Perhaps the bear market's over and we're just kind of slowly clawing our way out of it. And whenever that happens, there's going to be a lot of time to make money in the gold space. And, will I wish I would have bought at the lows back in, 2015? Probably, but it doesn't mean that there won't still be an opportunity to make money going forward. But I do believe there is an opportunity. I do believe there's a chance that we're going to get an opportunity for one last big buying opportunity. And I want to have some cash on the sideline for that. Again, a long rambling answer, but hopefully that gave you a little bit of insight into why.
With respect to let's just say gold and silver. Are there when you say one last chance buying opportunity, are you talking about a potential double bottom there, or is it the metals kind of going sideways to lower with low volatility for the next 6 or 9 months? What side are you leaning to? I can ask.
I think more likely it's sideways to down a little bit with low volatility over the next 6 to 9 months. But I do think that there's also an opportunity that if we get back to let's just say the 1150 level where we were at the beginning of the year, right? If for some reason that breaks, which I'm not convinced it will, but if it were to break, I could see kind of a very quick one-time $100 drop back to the lows of 2015, maybe even the $1,000 level, just as a quick wipe out for any last stragglers that are still holding on. Right now, I'm not predicting that. I'm not saying that's necessarily going to happen. But if it happens, it will not surprise me if it happens. And so if that's the case, hopefully we're going to be in there smart enough to buy at that level. But I think more than likely kind of bounce around between 1150 and 1250 for the next 6 to 9 months. But if that 1150 level breaks, I think it drops pretty quickly from there. Part of the reason too is last year, if you want to think about, let's talk about 2016 for a second. It was, you hear about these perfect storms of bad things. Like last year was a perfect storm for positive things for the gold world. You couldn't have had a higher number of positive catalysts for gold, right? And yet we got into July and it topped out and it turned back down, and here we are back at 1250, and the miners back down to dramatically off their highs. And so if all those things from last year weren't enough to hold it up, you got to ask yourself, why is it not going higher? You couldn't have had much better news, and that wasn't quite enough to break it out of its bear market. This year, again, there's a number of catalysts that, should have shot it higher, and it just hasn't done it, right? Here we are. Again, the bullion's actually doing okay. Bullion's up 8 or 9% for the year, but the miners so far are just not buying it. And when something should be going higher and it's not, you kind of got to ask yourself why that is, right? And you go back to 2013, and it was the same way. 2013, Germany starts to repatriate its gold. Cyprus goes bankrupt and they bail everybody out. There was 3 or 4 catalysts in the first 3 months of 2013 that should have sent gold dramatically higher, but it didn't. And when it didn't go higher, not only did it not go higher, it ended up breaking down. So whenever something should be going higher and it's not, it always makes me just try to figure out, well, why is it not going higher? What am I missing? And the answer, Jordan, is I don't know. I don't know what I'm missing. But something is just telling me that there's something still out there that I haven't factored in or I haven't been able to discover yet. And I'm certainly not willing to go through this market without owning physical gold, but I am willing to go through it without having a bunch of speculative bets. So with the part of the portfolio that we're not willing to be naked on, we've got our physical gold in case hell breaks loose. But because we're not going higher when many things tell me we should be, that also tells me that there's something out there that I haven't quite figured out. And so until I figure it out, I'm going to keep this cash on the sideline and wait for a better opportunity.
Right. And one, before I let you go, I guess one more question. I want to get your view on the stock market with respect to gold, because at least for me, I feel like, I've had the same thoughts as you, and I'm just thinking the strength specifically in the U.S. stock market. This negative correlation that we've been in since 2011. It still seems to be present, even though, perhaps gold did bottom at the end of 2015, but like real 30,000 foot view, U.S. stock market making new highs, gold sputtering after the big move last year. How does that factor in, if at all, for you?
Yeah. Here's the thing with gold, and this is unfortunately the truth with gold, and it's one of the things I don't like about gold, is that gold is it's a little bit like a religion. Like you either kind of get it or you don't. And I wish it wasn't like that, but very rarely do I meet somebody who has a positive view of gold who doesn't already own it, right? Usually, if somebody's not in gold, it takes a lot of convincing to get them into gold. And until people want to buy gold without you convincing them to do it, it's probably going to stay kind of in this sideways market. And the typical person does not think about gold. And if they do think about gold, they think of GLD or just buying a small mutual fund with 1% of their portfolio. And part of the reason is because they've always been told they don't need it, and the stock market keeps going up. So why do they need it, right? And I obviously take the other side of it, but if I put myself in their shoes and the stock market keeps going higher and the bond market is held up, and I can still pay my mortgage and I can still take a vacation every now and then and my kids are happy, why do I need to go buy gold, right? And I think until the psychology of the market starts to break a little bit, I think gold's going to move sideways. Now, I'm convinced that at some point the psychology of the market is going to break. And, when that breaks and people realize things aren't so great, then we're going to get a lot of inflows into gold. And, because the gold market is so small, it's going to shoot the prices much, much higher. But until that time comes, positive stock market is somewhat of a deterrent to gold. Also, if a lot of times people buy gold for inflation, I'm sure I will buy that argument. And if we get high levels of inflation, that is one of the reasons I own gold. I actually initially started allocating money to gold for the deflationary protection. There's no counterparty risk to gold. And if you look at the last 5 years, every time gold has rallied over the last 5 years, it's been during deflationary signals, not inflationary signals. And I think part of the reason is when we do get these short-term inflationary signals, that's an indication. Early inflation looks like growth. It looks like an uptick from a very bad situation. And, you got to, from 0 to 2% inflation, that's like good inflation, right? It's only when you get to 3, 4, 5, and 6% inflation where it starts to become mean inflation. And in that, 0 to 2 to 3% inflation, it looks like growth. It looks like things are getting better. And in that environment, people don't allocate to gold either because the stock market's going up, right? And I think that's kind of where we've been in. Now, as far as equities in general, I think equities, at some point they're due for a correction, right? I mean, they've gone up for 8 years. I think it's the second longest expansion in history. It's almost as long as they had during the 20s. Now, you see a lot of people out there comparing this time period to the 20s, and we're going to end up in a Great Depression. I don't think we're going to have a stock market crash. I think that we will have a stock market correction, whether that's 5 or 10%. I don't know. To be honest, I'd love it if we had a 5 or 10% correction, because I think that would take some of the froth out of the market. It would take some of the, it's the most hated bull market in history, right? It's very hard to find people that are pounding the table bulls on equities. Even though everybody's allocated to equities, I don't see a lot of people out there pounding the table saying, you got to buy, you got to buy, you got to buy. But there's a lot of pessimism out there. And I think if we had this pullback, it would be good. It would clear. Maybe it would make, the sentiment a little bit not quite as frothy. It would allow people who have been on the sidelines to maybe come back in. And, I'm not necessarily saying buy the dip, but the reason that I think stocks are going to go higher is that I think you can also make a very good case that bonds are in a bubble as well. Now, I think to a certain extent, everything's in a bubble. Real estate's in a bubble, stocks are in a bubble, and bonds are in a bubble. The problem is that the bond market is, 10 times as big as the stock market. Whatever it is, it's a lot bigger than the stock market. And if it turns out, and I'm not saying that this will be the case, but if it turns out that the bond bubble breaks before the stock bubble, for whatever reason, those funds are going to start coming out of bonds, and they've got to go somewhere. And if people wake up to the fact that the debt bomb in this, not just the country, but in the whole world is untenable, and the fact that they don't want to be exposed to those counterparties by governments that will never be able to pay it back, you could see a big problem in the bond market. And then that money's got to go somewhere. And that money, I think, will go not just into gold, but I think it will go into the stock market as well. And so I don't think we've seen the high in stocks. It wouldn't surprise me at all if we had a pullback in stocks. I actually would love it if we had a 5 or 10% pullback in the equity market. But if that happens, I think be very careful about thinking that stocks are going to zero, because I think we've got some other problems out there as well. Anyway, that's kind of a long, rambling answer again, but that's kind of my viewpoint on it.
No problem. And that point on inflation is very interesting. I never thought about it that way. Brent, let's leave it there. Thank you so much for coming on. I really appreciate it. And before I let you go, if any of our listeners want to learn more about the work you do, can you point them to a website or your contact info?
Yeah, you can go to Brent at SantiagoCapital.com. You can go to BakerAve.com. equities.com, which also has my information on there as well. But really appreciate you having me on. If anybody does want to reach out or email me, email is brent@santiagocapital.com. Happy to answer any questions or talk to anybody. Again, really appreciate you having me on. Happy to do this again, and look forward to staying in touch.
Absolutely. Yeah. Thanks again, Brent. And we'll have you back again in the next couple months to discuss all these developments.
Okay. Hopefully I'm wrong and gold rockets higher, but we'll see.
Thank you for tuning into the Daily Gold Podcast. For more interviews, editorials, and analysis, log on to thedailygold.com. And for premium coverage of precious metals and the best junior mining companies, visit thedailygold.com/premium.